Just a kind of a view, going forward, but I guess also looking back, that is, as I always say, very important. In the year 2010, we've had a mixed performance from many stock markets around the world. The Dow Jones, for example, was up 11% in US dollar terms, but the Nasdaq, which has got more technology stocks, was up 17%. And then the Mexican market, the stock market in Mexico, which actually had done pretty badly post-Lehman, has had a 27% rate of return in dollar terms because it exports to the US. So any kind of recovery in the US is nice for Mexico. Within the Eurozone, shifting geographical focus a bit, the broad Eurozone markets were down about 12% in the year 2010. But within that, there was again a very wide range. You had Spain down 23% in US dollar terms for the year 2010. You had the Stockholm index up 29% in US dollar terms. And then you had Swiss and Germany up about 9%, and you had UK up about 5%. Moving again to the Asian region, you had Japan and Australia up 11% in US dollar terms. You had the Shanghai stock market down 11% for the year 2010. You had the BSE 30 index up 22%. And then you've had the smaller Asian markets of Indonesia, Thailand, Philippines, which are up 52, 55, and 46% respectively. So a very wide range of performance, around the world. And also intra-region, you've had China minus 11 and you've had Thailand plus 55. You've also had currency sort of moving in very strange ways. You've had the euro down 6% in the year 2010 against the US dollar. Of course, it had gained in the first few months of the year, and then post the Greece crisis in May 2010, it slumped. So it gave you a net return of minus 6% if you were a euro investor. Again, this against the US dollar in the year 2010. The Swiss franc and the Japanese yen were up 11, 12, 13%, as was the Australian dollar. Most Asian currencies were up between 5% and 13% for the year. So you had euro currencies broadly weak, you had Asian currencies broadly strong, and of course this dollar being the benchmark was the same. But if you looked at the other currency, which, as you've heard me write and speak before, was gold. Gold was up 27% for the year 2010. And this is the fifth successive year that gold has given positive rates of return in US dollar terms. Gold continues on a long-term basis to be the only currency that has not lost against any other paper currency out there, going back to 1971, August 15th, when President Nixon took the US dollar off the gold standard. And again, just to put that in perspective, in 1971, August 15th, when the US was taken off the gold standard, which means there was no backing of gold behind every currency note that was printed by Ben Bernanke's predecessors in the Fed. At that point in time, the dollar was roughly $34 would get you 1 ounce of gold. Today, that same ounce of gold costs you $1,420, which, really in some way suggests that the dollar has lost 98% of its value in the last 39 years. Moving again in sort of current recent past to 2010, silver has done extremely well for those who invested in that metal or in that quasi-currency. It began 2010 January at a price of $17.57 an ounce, and it ended 2010 with $30.9 an ounce, $30.9 an ounce, for a gain of 76%. But you should recognize that much of the gain, in fact all the gain that's happened in silver, has happened from middle of August 2010 till the end of December 2010. There's been a huge spike in the price of silver. Some people say it's because of cornering of the market by a few speculators. Some people say that some people have been short, and therefore the guys who are long recognize that people have gone short, so they're sort of, again, cornering is the wrong word there, but they know that someone is short, so they're out there, kind of trying to make sure that those guys who are short lose their houses and their shirts and their jackets in terms of the settlement price of silver. And some people sort of say that the price of silver has gone up because there is going to be no supply of silver in the next 10 years. And there's another group, the fourth group, which says that the price of silver is going up because the world economic recovery is rock solid, and silver, correctly they point out, is used a lot in industrial activity. So silver continues, in our view, to remain kind of a half gold, half copper. Copper being the best proxy for industrial activity, and as you know, copper is now gone to has now gone to nearly $10,000 a ton, and it used to be $2,000 a ton, a few years ago. So copper has gone up dramatically, and again, copper shows sign of economic activity, but we still, and I'll talk more about this, we're still skeptical about silver relative to gold. Just to move a bit in terms of relative performances of the Indian markets to what you could have done in gold and silver over the last 5 years. So from December 31, 2005 till December 31, 2010, the BSE 30 index gave you a return of 18.6% in US dollars each year. Gold would have given you a return, of 22.4% in US dollars each year over the last 5 years. And silver would have given you a return of 28.5% in US dollars each year for the past 5 years. Again, recognize that in silver, much of the surge has happened since August 2010, going through December 2010. Again, comparing this to what would have happened in the world markets, in a kind of a broad way, the world index, the MSCI World Index, which tracks global markets, would have been up 4.1% over the last 5 years in dollar terms. And if you look at the BSE 30 index in rupee terms, as opposed to the 18.6% return in dollars, you'd have got 18.4% in Indian rupee, which means that the Indian rupee has lost just about 0.2% each year for the last 5 years against the US dollar. So the rupee has been relatively decent as a currency. Indian stock markets have done very well. Gold did better, silver even better. But India has done much, much better than the world averages, which is, again, going back to where we stand today. You've had a $29 billion flow of FII money in the year 2010, which is, again, a peak. The previous peak, of course, was 2009 in the post-Lehman recovery world, but this by far has broken that peak. Again, the statistics here are not very nice, just like silver. Much of this money, 20 billion in fact, 20 billion of the $29 billion that has come from foreigners in the whole year has really come in the last 3 months, in the last quarter. September, October, December of 2010 saw $20 billion of inflows from foreign investors out of the total, 12-month total of $29 billion.